What's happening, everybody? It's your boy Kreative. Go ahead, say it with me. We are back at it again to do what? To create something great. Now, today I'm super excited what I had planned for y'all. We're going to be dropping our second installment of our weekly market breakdown brief. And what we aim to do during this little 5 to 10 minute session or recording is to be able to go over what the market did this past week, our bot's performance, the trends that we're recognizing, and a couple of story or headlines to be able to keep up with as we are continuously going through our bot development. So let's go ahead and jump into it. So the week that I'm talking about is going to be the week 13, and that's going to be March 23rd through the 27th of 2026. So if you haven't already, go ahead and smash that like and subscribe button. So let's go ahead and jump in. So what we're seeing is that consumer confidence is cracking. And how is it cracking? Is that the Michigan sentiment came in at 53.3%. VIX broke 30 for the first time we've seen in months. Low key, kind of COVID or pandemic levels. And we're also seeing QQQ lead the decline as trade numbers price run hot. Now, one thing I want us to be able to understand is what is this Michigan consumer sentiment, right? So the Michigan consumer sentiment measures how the U.S. consumer feels about their finances and about the economy. It's based on a monthly survey for about 500 households nationwide, and it comes from the University of Michigan. There's two parts to it. There's going to be the current conditions and the expectation. Now, why it matters to us is because this is a leading indicator. It predicts spending, about 70% of GDP, which is gross domestic product. And the rising sentiment is letting us know that there's a bullish economy, and a falling sentiment is letting us know that there's a slowdown at risk. Now, the impact to the market is that the stocks and bonds and USD and traders watch the prelim and the finals plus inflation expectation. Bottom line, this is forward pulse for consumer behavior, not hard data to be able to understand it. Now, this week, the stocks dropped every day except a brief little blimp on Tuesday. The market fear gauge hit the highest levels that it had was in months, by it reaching 30. And the major survey of regular Americans showed that more are worried about the economy than since the early pandemic days. This week started with quite a stumble and with a hard sell-off for the rest of the week, right? Now, before we get into this week, it matters what happened the week before because this is a week of continuation. Last week, we saw the government report PPI, or producer price index. The cost of making things came in hotter than expected. At the same time, the Federal Reserve, or the Fed, decided to hold interest rates instead of cutting it. The combination has a name, and that name is called stagflation. And let's just go over a few of these terms so we can proper understand what we're going over. Now, remember, stagflation is when prices keep rising. This is going to be inflation, but the economy stops growing. That's going to be stagflation. Normally, price rises comes from the economy growing, more jobs, more spending. Stagflation is the worst case scenario. You get the pain of higher prices without the benefits of growth. It is hard to fix because the usual tools work against each other, and rising interest rates fight what can make stagflation harder. And then VIX, remember I told you VIX came in at 30. Those levels we haven't seen in quite some months, and the fact that it's popping 30 this week, and there's a couple of extenuating circumstances that's going on. There's a lot of geopolitical items that are causing VIX to be able to jump up, in addition to these different type of TEs, technical indicators, or reports that's been coming out. Now, remember, VIX is the fear index. It measures how much volatility traders expect in the next 30 days. VIX is calculated from the S&P, which is the S&P 500, the top 500 companies within the New York Stock Exchange. When traders expect a big move up or down, they pay more for option. VIX rises. A low VIX means a calm market. A high VIX means traders are bracing for turbulence. And a Fed hold, this is the Federal Reserve, is keeping interest rates unchanged at their meeting. The Fed meets roughly every 6 weeks to decide on interest rates. They rise to slow inflation and cut to boost the economy, or hold when they're uncertain or waiting for data. A hold isn't natural. It's telling you that the Fed isn't confident enough to make a move in either direction. Now let's go back to our report so we can actually see like what's been going on. Just make that a little bit bigger. Pause. So what's been going on day by day, right? And then I'll get to our bots performance, but I want us to be able to get what's been going on day by day. As you can see here, the week has been quite bearish, meaning that the market has been in quite of a sell-off, right? So everything dropped slightly on Monday. The only thing that went up was IWM, and IWM is the Russell 2000, the smallest 2000 companies within the US. And then we have DIA, which is the Dow Jones. This is the blue chip companies. This is the 30 blue chip companies, more old economy. And then we have QQQ. QQQ is the top 100 tech companies within the NASDAQ. And we already talked about SPY. So the main data point is that the Chicago Fed economy score came in at 0.11 when the analysts expected, negative 0.11 when the analysts expected 0.2. Think of it like a report card. Anything negative means that the economy is growing slower than it should be, and the economy is running hotter than needed. And then Tuesday, we saw more of the, again, as you can see here, VIX is just steadily increasing, right? Just day over day within this market. And then we have the pivot on Wednesday, right? Three reports land on the same day. We have the oil inventory, the official government count, now 6.9 barrels versus the estimated of 0.5 million. Nearly 4 times the expected amount is sitting in storage. This is the second week in a row we have a massive build. Last week was 6.156 million barrels. See week 12 for more information. Now, back-to-back crude week pile up signal demand is falling off. Report 2 that came in on Wednesday was the import prices, up 1.3% in a single month. Expected was 0.5%. The import prices are what Americans pay to bring goods in from other countries. They're rising faster than expected, meaning costs are going up, and don't we can feel it. And then the export prices are up 1.5% in a single month. Expected was 0.5%. When what the US charges for goods going out is also rising. Both direction of trades are getting more expensive. Put this together, the economy is slowing, but the cost is art. That's the same stagflation signal from week 12 showing up in a different state. And then we have the dead cat bounce that happened on Thursday. And after this, we're going to jump straight into our performance for our bots, right? So tech, QQQ dropped 1.3%. This is the biggest single day loss that we had. Everything else also fell. The job reports came in basically on target. 210,000 people filed for unemployment, right as expected. You think good jobs data equals good news, but there's a problem. When the economy is running hot on inflation, strong job numbers means that the Federal Reserve has no reason to cut interest rates, and rate cuts help the economy, especially tech stocks. No cut equals no help, and the stock fell. And then we had the gut punch that happened on Friday, right? So as you can see here, day over day, we're getting the VIX higher. We're making lower lows. The market was just extremely sold off. VIX for the first time crossed 30. Every major index closed near the worst levels of the week. The headline was the Michigan Consumer Index printed at 55.3, down from 56.6 from last month, February 2026. The survey asks regular people how they feel about the economy and their financial situation. A drop from 56.6 to 53.3 in 1 month is significant. This is not statistical noise. It is a direction. People are getting more pessimistic faster. At 53.3, the reading is not a level not seen since the early pandemic crisis. Now we have a lot of things that are converging, right? We have the Michigan Consumer Price Index that's coming in at 53.3, right? We have VIX that peaked at 31.64 on Friday. That is the 92nd percentile of all-time readings, meaning that the market has been fearful for the past couple of days. And let's just take a look at what of our bots have been performing this week, right? Now on Monday, we did come in, we had 2 green days, right? Even though the market has been kind of down this entire week, our bots has been kind of surviving. There's a few that we had to pivot away against. Now on Monday, we see that we took 40 trades, and the bot that led the way was ADXBaby. Now there was a couple of trades Again, another day that does well, and I'll make a video about Screeny Baby so we can actually go to it. I think what's another good view is just being able to see the week over week performance, right? Hold on, and then I'll go to month to date. So as you can see here, for this week, we're down $150. We had 5 trading days, 182 trades. We had 49.9%, and our best day was 29, and our worst day was 69.65. Average was about 30, losing 30.12 per day. Now, even on our worst day, right, I still have bots that are performing well. It's just other bots that I'm still tuning, right, to be able to get them perform a little bit better, i.e. Star Baby, right? There's a couple of things that I needed to do to Star Baby in order to make this algo bot work a little bit better. Those things being being able to change how it uses support and resistance, right? Making sure that the data that it's using is actually benefiting for it. Now, there's more that we've done, but I just want to keep this video not too long, being able to go over it, right? There's a couple of draggers here, and as you can see, for the first time, Screeny did take a couple of L's. This market was extremely hard to trade this week, right? So it did bet calls when the market was in a massive sell-off on Wednesday, and on Friday we did have a couple of bots that did show up in the green, but overall not too good. And just for the trend, week over SPY, week to date is down 3.4%. QQQ week to date is down 4.5%. VIX closed at 30, fam. That's one of the things that's kind of like alarming, because we haven't seen these levels since pandemic, or excuse me, since December. I think that's when VIX crossed 30. But the fact that it's been hovering around 29.30 is something to be alarming. Michigan sentiment, we talked about that, dropped 3.3% month over month, and the spread is 56 bip points. So week over week for our bots, we did have a couple of things go up, right? So the fleet is improvement. In a week where QQQ dropped 4.5% and VIX crossed 30, the fleet only gave up 23 more dollars than last week. Fewer trades, higher quality. Month over month, February's P&L was massively, I guess, overrepresented by this mini bug bot that's no longer trading right now, because I realized that bot is just, I don't know why I launched it, but I had to stop that bot because there's a couple of bugs in it that I really need to fix. So it's not one of those bugs that it took a trade and lost 2,200 in that one trade, really skewing the numbers. So the real month-to-month win rate is up 5% versus our bots. And here's some of the bots that are performing quite well. So what we have is ADXBaby, that is the star, Easy, and then Screeny Baby. And then we have a couple that still need more work, but if you just look at the numbers, they are getting better. Now, if you want more videos like this, don't forget to hit the like and subscribe button. It is your boy Kreative. I'll be back at it again with another episode.